Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the economy in Russia. Now, if you've been following the channel for a long time, you'll know that over the last 18 months or so, Russia has severely restricted the flow of data that the West is able to look at. I was previously posting some detailed videos talking about the Russian P&L because we were getting lots of information directly from the Kremlin. However, unfortunately, that information has now dried up. And the only thing that we get now are the official press releases from TASS, the Russian news agency. So anybody that's thinking of sending me a message about this video saying, hey, Joe Blogs, you're making up all of these numbers, stop talking rubbish, Russia's doing really well. This data in today's video is the official data that's been published by the Kremlin. And recently, TASS published a press release saying that in the period between January and April 2025, China's trade with Russia had dropped by 7.5% to $71 billion. So the press release read, trade between China and Russia dropped by 7.5% in January to April 25. The General Administration of Customs of China stated in UTS report on Friday. Import of Russian goods to China, so basically Russia's exports, dropped by 9.1% during the reported period to $40.3 billion, while the export of Chinese products to Russia, so Russia's imports from China, decreased by 5.3% to $30.81 billion. The bulk of Russian goods supplied to China by value are oil, natural gas, and coal, which obviously we knew. That's what Russia makes most of its money from, its fossil fuels. Other products also included copper and copper ore, timber, fuel, and seafood. So lots of basically raw materials that China has been buying from Russia historically, but China is now cutting back on these purchases. And the press release finished by saying China exports a wide range of products to Russia, from cars, tractors, computers, and smartphones, as well as industrial and specialized equipment, to children's toys, clothing, and footwear. So what we're seeing here is a reduction in the level of trade between Russia and China in the first 4 months of the year. And that's got to be a concern from Russia's point of view because China is now its largest trading partner. The Russian economy is dependent on that trade from Russia, particularly the sale of fossil fuels. But it doesn't just end there, because TASS also then published another press release on June the 10th, saying that Russia's foreign trade surplus had decreased by 18.3% to 42.4 billion in the 4 months between January and April, according to figures provided by the Federal Customs Service. That's the Russian Federal Customs Service. It went on to say exports fell by $7.9 billion in the reporting period to $128 billion, while imports increased by $1.6 billion to $85.8. Consequently, Russia's trade turnover slipped by 2.8% in January to April year on year and amounted to $214 billion. So what we're hearing here is that Russia is seeing a reduction in its exports and an increase in its imports. So basically the balance of trade is moving negatively. Russia's spending more on imports and it's receiving less for its exports. Now, in terms of the breakdown of that, we've already heard what was happening with China. But if you look at this on a continental basis, the press release states exports to European countries fell by 11%. Not a major surprise, although we are talking year on year compared with the same 4 months for the start of 2024. So the sanctions were already fully baked by then. So even the countries that are still doing trade with Russia have reduced their purchases by 11%. So that's a loss. So that's down to 19.2 billion now, while imports lost 1.6% to 21.9 billion. That said, Russia's exports to Asian countries decreased by 4.1% to 97.6 billion, while imports from those countries added 2.4% to 57.5. We'll have a look at a table in a moment that I've put together with these figures, so we'll go through it in a bit more detail, but I'll carry on with this press release. Exports to African countries fell by 11.3% to 6.9 billion, while imports gained 35.6% to 1.5 billion. Russian exports to countries of North and South America went down by 10.4% to 4.3 billion, while imports from those countries went up by 6.7 billion. So we're seeing a very consistent theme here across all of the different continents that Russia is seeing a reduction in the value of its exports and an increase in the cost of its imports. Mineral products accounted for the largest share of the structure of Russian exports, not surprisingly, in the reporting period, totaling 72.8 billion, which was down by 15%. So that's a 15% reduction in fossil fuel exports. Metals and metal products were the second largest item, and their exports grew by 13.9% to 20.4 billion, followed by agriculture products worth 12 billion, which were down by 15.4%. So there's a huge fall in fossil fuels, a massive fall in agricultural products, and an increase in metal products, but that increase in metal products isn't going to go anywhere near enough to offset the loss of the other value products. Machinery, equipment, and transport vehicles constitute the largest item of Russian imports. Through January-April, their imports edged down by 2.6% to 41.6 billion. Chemical products and agricultural products were the second and third biggest items, reaching 17.6 billion, up by 9.6%, and 12.9 billion, up by 12.5%. Now, if we have a look at this table that I pulled together, which summarizes what we've just heard from TASS there, that was the official press release, I've broken this down into the different continents. So we start off looking at Asia, and obviously Asia includes both China and India. So that's basically the two biggest customers that Russia has. In the 4 months between January and April, total exports were $97.6 billion. And that represented a fall year on year of 4.1%, which in dollar terms was over $4 billion. Now, in terms of imports from Asia, they were 57.5 billion, which was actually an increase of 2.4% or $1.35 billion. So in terms of the balance of trade with Asia, it's got worse from Russia's point of view in those 4 months. It's selling less and it's buying more. In terms of the trade with Europe, total exports were 19.2 billion. So still a significant number for anybody that's watching this thinking, well, Europe's completely blocked all Russian products. Quite clearly they haven't. They're still buying $19.2 billion worth in a 4-month period. So that's roughly around $5 billion per month that Europe is still paying to Russia. But that was down 11% year on year. And that equates to 2.37 billion, the loss of revenue from Russia's perspective. And in terms of imports, they equate to 21.9 billion. That's as imports into Russia from Europe. That represented a fall of 1.6% or 0.36 billion. So you can see that the balance of trade between Russia and Europe, interestingly, Russia is buying more from Europe than Europe is buying from Russia. And that's a massive difference to what we were looking at 4 years ago before the invasion of Ukraine started. Russia was exporting a huge amount of oil and gas and other fossil fuels to Europe. And so it had a huge trade surplus, something that we're familiar hearing from Donald Trump, hearing about trade surpluses and deficits. But that trade surplus has now become a trade deficit from Russia's point of view. They're now more dependent on European imports than Europe is for Russian exports. In terms of the trade with Africa, the total value was 6.9 billion in the 4 months. That was down by 11.3%, which interestingly is the biggest percentage fall out of all of the continents that we're looking at here, interestingly. That represented a fall of 880 million. And in terms of imports, the total value is 1.5 billion. And that was up by 35.6%, equating to 390 billion. So in terms of the balance of trade, there's still a trade profit. They're still on a surplus from Russia's point of view. They're selling more products to Africa than they're buying from Africa. However, the shift in that surplus has been in Africa's favor. There's been a movement, a reduction in the amount of fossil fuels they're buying and an increase in their exports. So Africa's position is improving. It has improved in the first 4 months of 2025. And in terms of North and South America, the total value of exports was $4.3 billion, which was down by 10.4%. That equates to around 500 million. And in terms of imports, it was 4.8 billion, which was up by 6.7%, equating to 300 million. So you can see here that once again, the balance of trade between Russia and North and South America is now in North and South America's favor. They're exporting more products to Russia than Russia is exporting to them. So Russia's in a trade deficit with those continents. And if we look at the bottom line here, you can see that total exports from Russia in the 4 months were $128 billion. That represented a fall of 5.9% in the first 4 months of this year. And in value terms, that's a loss of income for Russia of $7.95 billion. So just under $8 billion. Russia is worse off than what it was in 2024. And if we look at the imports, they totaled 85.7 billion, which represented an increase of 1.8%, which was a rise of 1.68 billion. So if we add that onto the 8 billion loss of revenue, we're talking almost $10 billion that Russia is worse off right now than it was at this point in 2024. And obviously that tells us that pressure is continuing to mount on the Russian economy. And in terms of verifying that data, I thought it was worth having a quick look at this chart, which regular viewers of the channel will be familiar with. It comes from the Center for Research on Clean Air and Energy, and it's basically showing us what Russia's total revenue is from all of its different fossil fuel sales dating back to the start of 2022. And we're looking at 2025, the last 4 months on this chart, which is what we've just been talking about, the data that's been provided by TASS. You can see that there has been a drop-off in terms of revenue for Russia's point of view. In fact, if you compare it to where Russia was back in 2022, it's obviously a significant decline. At one point, Russia was earning over 1 billion euros per day, which is more than $1 billion per day from the sale of its fossil fuels. However, today that figure is down to around 600 million, so a significant reduction. And we look at the summary that the CREA have provided. They are saying that in April, Russia's monthly fossil fuel export revenues saw a 6% month-on-month drop to 585 million euros per day, while export volumes marginally increased by 1%. So what that tells us is that Russia is actually selling more oil, its volume went up, but its revenue is going down. So that tells us that the price that Russia is selling that oil for is worse than it was this time last month, and it's significantly worse than it was back in 2022 when it was over $100 per barrel. Revenue from seaborne crude oil decreased by 14% month on month in April to 204 million euros, while export volumes surged by 3%. So that's quite a big swing in terms of seaborne crude oil. 3% increase in volume. So Russia is actually selling more oil in actual quantity terms, but it got paid 14% less for that oil. So that represents a problem for Russia because they're having to increase their production and sales volumes, but their revenue's going down. And Russian revenue from crude oil via pipelines dropped by 2% to 70 million euros per day. And the pipeline oil sales is actually the highest margin from Russia's point of view because it's the least cost. Those pipelines already exist. All Russia has to do is feed the oil into the pipeline and it will flow to its destination. So it's actually the best form of delivery from Russia's point of view. They don't have to pay shipping fees and moving the oil on and off the ships and all of those sort of things, and insurance that you have to have on the shipping, all of those type of things. So the fact that the pipeline value went down by 2% is also bad news for Russia. Now, interestingly, Russian liquefied natural gas revenue increased by 1% to 40 million euros per day, but the volume increased by 7%. So once again here, we're seeing that the actual quantity that Russia is selling is going up, but its revenue has only gone up by 1%. And when you compare that to the oil, it's only 40 million euros per day compared with the fossil fuel total revenues of 585 million. So it's a pretty small percentage of Russia's total fossil fuel sales. Revenue from pipeline gas decreased by 10% to 52 million euros per day, and the volume of pipeline gas also dropped by 4%. So again, here we're seeing a bigger reduction in the revenue that Russia's receiving compared with the reduction in the quantity of gas. Russia revenue from seaborne oil products decreased by 14% month on month to 155 million euros per day. And the only light on the horizon from Russia's point of view is that its revenue from coal exports increased by 10% to 63 million per day. And China is the world's biggest buyer of coal. It's still producing a lot of electricity using coal, still building new coal-fired power plants. So all of that represents seriously bad news for Russia. But in terms of the latest information that's been published by TASS, once again, this is the official press release. This isn't me making this up. This release, which was issued on June the 9th, says trade turnover between Russia and China in the 5 months between January and May fell by 8.2% year on year to 88.8 billion. Exports from China to Russia decreased by 6.6% to 38.9 billion, while supplies from Russia to China lost 9.5% to just under 50 billion. So in the 5 months, Russia's total sales to China are now down by almost 10%. So we're seeing an increasing trend here. The situation is getting worse. In May, trade turnover between the two countries amounted to 17.7 billion, which is 0.6% lower than it was in April. China exported 8.1 billion worth of goods to Russia last month, while Russian deliveries to China, Russia's exports, equaled 9.6 billion in money terms. Trade turnover between Russia and China rose by 26.3% in 2023 to 240 billion. In 2024, it reached a record level of 244 billion. So what this tells us is that we've seen the peak potentially in the trade between Russia and China. It hit a high in 2024, but it's now starting to come back down. And obviously from Russia's point of view, that represents a serious concern. So what's the summary and conclusion today? Well, I wanted to post this video because we don't get a lot of live data coming out from Russia. It's very difficult to actually find out what's going on, to get the specific information. But the TASS news agency, which is sponsored by the Kremlin, this is the official news agency for Russia, so these are reliable figures coming out from the Kremlin, has posted detailed information for the 5 months to the end of May. And what we've seen is that over the start of 2025, the amount of trade between Russia and China is going down. China is now buying less exported fossil fuels than it was in 2024. Now, you may ask the question as to why is this? Why is China cutting back on its purchases? Is it because the Chinese economy is slowing down? Or is it because the Chinese authorities are now making the decision that they don't want to buy as much from Russia? Well, in order to answer that question, you'd have to watch some of the videos that I've been posting on China, which do indicate that the Chinese economy is definitely slowing down. It's set a growth target for 2025 of 5% in GDP, which was the same as 2024 and 2023. It just about scraped in 2024, but it looks unlikely that China is going to hit that 5% target for 2025. So we are definitely seeing a slowdown, and the trade war that's going on between the USA and China at the moment still hasn't bottomed out. They're having meetings at the moment trying to agree a trade deal, a long-term deal. But until that deal is signed, we've still got these extremely high tariffs hanging over the head of anybody that's doing trade with China. And that's causing uncertainty in the USA. And therefore, people are holding off making more orders. So we've got a lot of things going on at the moment which are going to disrupt the full year outcome for 2025 for a lot of Chinese companies. So there's definitely some disruption in the Chinese market. But also, I think what we're seeing is the Chinese authorities taking a deliberate step to reduce the amount of purchases that they're making from Russia, because China doesn't want to become dependent on Russian fossil fuels. And the USA has been saying recently that it's thinking about applying some secondary sanctions that would effectively hit anybody that's dealing with Russia with 500% tariffs for all of their exports to the USA. And China certainly doesn't want to be put into that bracket. So what we're seeing is China cutting back on the amount it's spending with Russia. And from Russia's point of view, that obviously represents a major problem because it's losing revenue. We talked about it today. It's lost around 8 billion in the first 4 months of the year, and that figure's likely to be above 10 billion to the end of May. We don't have the exact details. TASS didn't give us that information. But I think it's a fair estimate to say that it's down by 10 million in the first 5 months. And if you extrapolate that forward for the rest of the year, then basically Russia would be losing 25 to 30 billion dollars worth of revenue if things continue as they are. But unfortunately, from Russia's point of view, it's actually worse than that because they're increasing their purchases. We saw from the data that they're actually buying more things from most of the continent. So the balance of trade is switching, and Russia is therefore spending more and receiving less. And all of that is going to increase the pressure on the Russian budget because they're going to have to find more money from somewhere to keep the war in Ukraine going. And that somewhere historically has been the National Wealth Fund. And we've talked about this in previous videos that Russia has dipped into the National Wealth Fund over the past 3 years. It's come down from around 150 billion to the latest estimate, which was less than 50 billion. So a significant fall. And if Russia continues spending at the current rate, then that National Wealth Fund could run out at some point over the next 12 months. And if that happens, then Russia would have to start issuing more debt in order to keep the war going. And as we've talked about, the international markets aren't really interested in Russian debt right now. So that would have to come from within Russia, from Russian investors and oligarchs and all of those guys. And so this will then put further pressure on the Russian economy. So the overall summary of today's video is that what we've seen from the official data being published by TASS, the news agency that's authorized by the Kremlin, is that in the first 5 months of 2025, Russia's revenue from fossil fuel sales is down significantly, more than $10 billion. It's spending more on imports, which means that its balance of trade is shifting. It's got less cash to keep the war in Ukraine going, and so it will have to keep dipping into its reserves, and at some point, those reserves could run out. So hopefully you've enjoyed today's video, you found it useful, informative, and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you to everyone that's supporting me and the channel. If you've bought me a coffee or sent me a YouTube super thanks, really appreciate that. Thanks a lot. And if you've signed up as either a patron or a YouTube member or a Buy Me a Coffee member, thank you for that long-term support. Really helps to keep me motivated. And here's something to put a smile on your face.